diamond drilling, and that diamond drilling is starting to target some of the higher grade shoots that we've identified at our existing resource areas, and ultimately looking to chase those higher grade shoots at depth to start to prove up the potential for underground mining in the future.
Well, hello, welcome to Assay TV. Today I'm delighted to be joined once again by Luke Alexander, who is the President and CEO of Newcore Gold. Newcore are drilling a 66,000 meter campaign at their Enchi project in southwestern Ghana. And today, the company has released an updated PEA on the project. Luke, great to see you again. We spoke reasonably recently, but a lot of activity for the company. As I mentioned, you've just released a new PEA on the project. But before we get going, for viewers who are unfamiliar with the company, could you just give us a quick little sort of snapshot of Newcore?
Yeah, thanks for having me on, Leo. So our Enchi project in Ghana, it's a district scale exploration project. We've got a 66,000 meter drill program, which we're about halfway through at the moment. We just released the PEA, as you highlighted. So we're focused on obviously highlighting the fundamental economics of the project. And then from here on out, we're going to continue to focus on exploration and really starting to grow the overall size of the resource at our Enchi project.
I mean, it's a very extensive land package you've got there. How many square kilometers? 216, I believe, something like that.
Yeah, 216 square kilometers across the land package. We've identified 25 targets to date, of which we've only drilled on 6 of them. Within the PEA, which I think we're going to talk about in a bit more detail, we also included a small resource update, and we had a maiden resource at an area called Kwachikrum. So that's our 4th resource area, and ultimately is now part of our total 1.4 million ounce resource.
Okay, so I mean, let's talk about the PEA now, and if we go through some of the sort of key numbers that has sort of produced. If we could start off with some of the economic figures, some of the NPV and the IRR that you're predicting.
Yeah, so our project is a heap leach project. I think I'll just highlight that first of all, because heap leach projects are obviously a much lower capex way of producing gold. So when we look at the economics and specifically the NPV and IRR, we ran our study at a 1650 gold price. So we've got a after-tax NPV of 212 million with an after-tax IRR of 42%. So very robust economics at 1650 gold. If we look at that at an 1850 gold, we're just over $300 million after-tax NPV and a 54% IRR and less than a 2-year payback. So very good economics from that perspective. And the other way I might look at the NPV is in relation to the capital cost. So if we look at the NPV relative of 300 million relative to the 97 million of initial capital, for every dollar you put into constructing the project, you're ultimately getting $3 back. So very good ratio from that perspective, and we're extremely pleased with the results of the PEA and the fundamental underpinning of value that it's created for our Enchi project.
I mean, as you mentioned, it's a heap leach, simple heap leach processing for the project, but also open pit mine. So all of those factors are leading towards this sort of low capital cost and good returns. But in terms of your
one thing I'd just add to that, Leo, sorry to interrupt, is the strip ratio. So that's one of the big things that also helps drive those economics. Is we're looking at a 2.1 to 1 strip, and at Sium, which is our largest deposit, we actually dropped down to a 1.3 to 1 strip. So that helps the overall economics as well as the things that you mentioned.
Excellent. And in terms of your sort of annual gold production, how many ounces do you expect to be producing each year?
So it's an 11-year mine life with a year 1 ramp up, and in year 11 we're kind of ramping down. So over that 11-year period, there's a total of just under 1 million ounces of production. In years 2 and 5, once we've kind of ramped up from year 1, we've got an average annual production of about 104,000 ounces. And over the entire life of mine, we're just under 90,000 ounces of production. So a good sized project, with our largest kind of year of production actually near the back end of our project in year 10 with 121,000 ounces of production. So a very good production profile from that perspective, and something that we think with the additional drilling and exploration that we're going to do that we'll be able to significantly build on.
Absolutely. Well, as you mentioned, we're in the middle of you're in the middle of a 66,000 meter drilling campaign. How much of the drilling were you able to include in this PEA?
So all of the drilling that we were able to get completed in 2020, which was about 20,000 meters, we were able to send that off to our independent engineer, BBA, who did this study. So they were able to include that in the PEA, as well as get a very small resource update done within that study. Since then, so since call it in January 1st of this year, we've released an additional 20,000 meters of drilling. All of that's been step out drilling, and over time we think will ultimately add to the resource. And then, we've got another 26,000 meters of drilling that we're going to get completed in the next few months here. So so in terms of what was included, 20,000 meters, and what's going to add to resource on the back of the completion of drilling is an additional 46,000 meters.
As you mentioned, there was an updated resource estimate for Quachicrum. How much did that manage to add to the resource?
So it took our pit constrained resource from about 1.22 million ounces to 1.41 million ounces. So it added roughly 200,000 ounces.
And I mean, Quachicrum, as you mentioned, is only one of several projects, areas that you're drilling on. Tell us about your current sort of activities. Where's the main focus of that?
Yeah, so we've now got 4 resource areas. Quachicrum is the most recent one that we've added to our overall resource. We've got 2 additional areas that we've had some historical drilling done on. We've got a Ratty, which is way up in the northern end of our property. We've got 10 historical holes there. We've actually just sent a couple of rigs up there, and we're in the process of doing some follow-up drilling given the past success we had there, and we'll get that completed. But then outside of those kind of 6 areas that we've that either make up our resource or that we've got some historical drilling on, we've got another 20-yard targets that we've kind of identified across the property. Some of those we've started to do a lot of work on, including one that I'll highlight, Sium South. It's right down at the southern end of our property. We've just completed 2 kilometers of trenching down there. It's a 3.5 by 2.5 kilometer anomaly, and we'll look to drill that for the first time ever in the next few weeks here. So we're looking to ultimately make some new discoveries at some of these new areas that have never been drilled before, but also not lose focus on the opportunity to significantly grow resource by continuing to step out at our existing deposit areas. And then the last piece I'll just maybe add from a drilling perspective is, if you look at the last 28,000 meters of drilling that we're going to release to the market over the next few months and that we're going to continue to drill, about 18,000 of that will be focused on diamond drilling. And that diamond drilling is starting to target some of the higher grade shoots that we've identified at our existing resource areas, and ultimately looking to chase those higher grade shoots at depth to start to prove up the potential for underground mining in the future. If we look at other deposits along the Bibiani Shear to the north of us, including the Chirano mine, which sits about 50 kilometers away, where you see these greenstone hosted deposits increase in grade and really grow in size is once you get through that oxide transitional material, which we've really highlighted in this PEA in terms of the robust economics of that material, but you start to get higher grades in the sulfide. So for the first time ever, we're starting to drill some deeper holes to ultimately target some of those areas. And we've had some good results so far, and excited to be there with the diamond drill starting to drill deeper as well.
I mean, I think this is obviously something to stress, and something we touched on in the earlier interviews. The fact that you're only just going in the sort of the shallow oxides level at the top at the moment, and the potential you're looking for is for these much higher grade, deeper sulfides.
Yeah, absolutely. I mean, we when we look at our current resource, I mean, the average depth of it is about 65 meters. I think it's 63 meters to be specific. So again, it's really focused on that oxide transitional zone, which ultimately lends itself to a heap leach opportunity. And the PEA is based on those ounces. And, we're excited, though, to ultimately show that there's deeper potential here as well. Again, if we look at Toronto to the north of us, I mean, they're currently producing gold down at 750, 800 meters below surface. You look at Ahafo, one of Newmont's two producing mines in country, similar kind of thing, big underground operation. So yes, we've got a very robust open pit operation, but part of the bigger story that we're going to be able to tell here is ultimately the underground potential.
Absolutely. So just early days, but looking forward into 2021, what are the sort of key catalysts that people should be looking out for?
I think now that we've put out this this PEA, I think over the next few weeks we'll start to see the market kind of obviously re-rate the company given the underpinning of value that this PEA creates. I mean, if you look at where we're trading today, we're trading at about $60 million Canadian. You look at that, so that's about $50 million US, and again at 1850 gold, we've outlined a $300 million NPV, so that would have us trading at about 0.2 times, which I would argue is kind of undervalued for a company, with a robust project like this. But ultimately, where we're going to add value from here going forward is through the drill bit. So we'll have lots of drill results to come, and that's going to be the focus. And then once we've completed all that drilling, we'll look to put out additional economic studies to further underpin the value of the company for our shareholders.
So lots of news flow coming out over the next few months and an exciting unfolding story for the company. Well, thank you very much for joining us today for that update, and look forward to seeing more news coming out over the next few months.
Yeah, thanks a lot, Leo. Good to see you again.
Thank you.